Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're diving into a promising development in the Ontario real estate market as reported by the Toronto Regional Real Estate Board, or TRREB. According to their latest findings, the housing market is expected to become more affordable in 2024, thanks to a combination of lower interest rates and a decrease in home prices. This comes as good news for potential homebuyers who have been struggling with high costs in recent years. TRREB notes that the reduction in interest rates is a significant factor contributing to this increased affordability. With borrowing costs decreasing, more individuals and families will find it easier to qualify for mortgages, thus opening the door to home ownership for a broader segment of the population. This trend is expected to help stimulate the real estate market by attracting new buyers who were previously priced out. In addition to lower interest rates, TRREB points out that home prices are also seeing a modest decline. This change can be attributed to several factors, including a slight increase in housing supply and a shift in buyer preferences. While these trends are promising for buyers, it remains essential for them to stay informed and consider all factors when making purchasing decisions. It's important to note, however, that while TRREB's report is optimistic about the affordability shift, the market is still subject to various influences that could affect these projections. Economic conditions, government policies, and global events can all play roles in shaping the housing landscape. Therefore, potential buyers and investors should remain vigilant and seek professional advice when navigating the real estate market. Today, we're delving into the often complex world of pre-construction purchases, a topic that has garnered attention recently due to some surprising challenges that buyers may face on closing day. In a recent article by Ross Taylor, a seasoned mortgage broker with over 20 years of experience, he shared a cautionary tale about a couple who navigated the pre-construction purchase of a condo townhome, only to find themselves frustrated by unexpected costs and valuation issues. The couple's journey began in 2021, a time when the Canadian real estate market was exceptionally competitive, with mortgage rates at historic lows and property prices surging at double-digit rates. The couple initially focused on resale properties in the Greater Toronto Area, but were repeatedly outbid in intense bidding wars, a common experience for many buyers at the time. Faced with the challenges of the resale market, they shifted their focus to pre-construction properties, hoping to avoid the fierce bidding wars. They eventually secured a townhome in Pickering, priced at $729,900, with an interim occupancy date set for August 2024. However, as the market shifted, challenges emerged. The Bank of Canada raised interest rates significantly, cooling the real estate market and affecting the value of pre-construction properties. By the time their closing date approached in December 2024, the appraised value of their property had dropped to $630,000, $100,000 below their purchase price. This discrepancy forced them to scramble for financing solutions, ultimately finding a lifeline through the builder's bank, which agreed to lend at 65% loan-to-value based on the original purchase price. In addition to the appraisal issues, the couple faced unexpected out-of-pocket costs, including utility meter installations, parkland levies, and property taxes, which added up to $45,000. These additional costs, combined with a higher mortgage interest rate, left them disheartened and with a total cash requirement far exceeding initial expectations. Ross Taylor's article highlights the risks and uncertainties that come with buying pre-construction properties. While there are advantages, such as avoiding bidding wars and customizing a home, potential buyers must be aware of the potential for unexpected costs and market fluctuations. Taylor suggests budgeting for extra costs, working closely with a real estate lawyer, and securing mortgage financing early to navigate these challenges effectively. It's crucial for buyers to do their due diligence and plan ahead, especially when dealing with pre-construction properties. The market dynamics can change rapidly, and as this couple's story shows, being prepared for the unexpected is key to successfully navigating the closing process. We're shifting our focus to the ongoing issue of mortgage affordability, which continues to be a significant challenge for many Canadians. A recent survey conducted by Pollster Ledger for the mortgage comparison site everyrate.ca has highlighted the widening gap between what individuals can comfortably pay for housing and their actual monthly costs. According to the survey, two-thirds of respondents indicated that they could manage monthly housing costs of $1,749, which is 5% below the national average monthly mortgage payment of $1,829, as reported by the Canada Mortgage and Housing Corporation. This discrepancy highlights the financial strain many households are under, trying to keep up with rising housing costs. Interestingly, nearly 40% of participants stated that they could afford no more than $1,000 a month for housing. This statistic underscores the challenges faced by a significant portion of the population who are struggling to meet their housing expenses. Even higher-income households are not immune to this financial pressure. The survey revealed that 42% of respondents earning more than $100,000 annually cannot comfortably manage payments exceeding $1,749 per month. Andy Hill, a mortgage broker and co-founder of everyrate.ca, remarked on this finding, noting that even those with seemingly substantial incomes are feeling the pinch. The survey sampled 1,500 Canadians, with a little over half of the participants earning $60,000 or more annually. The majority had post-secondary education, and 63% were homeowners. This data suggests that the affordability crisis is widespread and not limited to low-income Canadians, as Andy Hill pointed out. First-time homebuyers in particular are finding themselves in a precarious position. Everyrate.ca noted that national mortgage averages can obscure the true extent of the crisis, as they do not account for the disparities between those with stable existing mortgages and new buyers who are contending with high home prices and rising interest rates. This situation makes the market appear more affordable than it is for most people, especially for first-time buyers who are facing steeper financial challenges. The survey's findings emphasize the need for potential buyers to carefully assess their financial situation and explore all available options to manage their housing expenses effectively. The relationship between mortgage brokers and lenders is one of the most important components of a flourishing industry, and it is expected to remain crucial in 2025. Recently, I had the opportunity to speak with Renee Quercia of Home Equity Bank to gain insights into how this lending giant has been working with brokers to foster successful relationships in recent times. Renee Quercia emphasized the importance of clear communication and mutual understanding between brokers and lenders. The key to a successful partnership is transparency, he said. Both parties must be open about their expectations and capabilities to ensure that the client's needs are met effectively. Home Equity Bank has been focusing on building trust with brokers by providing consistent support and resources. Quercia noted that the bank offers training programs and workshops aimed at helping brokers stay informed about the latest products and services. This initiative is part of their broader strategy to empower brokers with the knowledge they need to serve their clients better. Moreover, Quercia highlighted the significance of technology in enhancing broker-lender relationships. Technology plays a pivotal role in streamlining processes and improving efficiency, he explained. We have invested in digital platforms that allow brokers to access information quickly and manage their clients' applications more effectively. Despite the advancements in technology, Quercia acknowledged that personal relationships remain at the heart of successful collaborations. While digital tools are essential, the human element cannot be overlooked, he stated. Building personal connections with brokers helps us understand their unique challenges and tailor our support accordingly. Looking ahead, Quercia expressed optimism about the future of broker-lender relationships. He believes that ongoing collaboration and innovation will continue to drive the industry forward. As long as we keep the lines of communication open and work together towards common goals, the mortgage industry will thrive, Quercia concluded. As we kick off 2025, It's important to stay updated on the new housing laws and regulations that are set to take effect across Ontario. These changes are significant and aim to address various challenges in the housing market, including affordability and availability. Let's take a closer look at these new laws and what they mean for builders, buyers, and renters in Ontario. First up, we have the Rental Renovation License Bylaw in Toronto. This new regulation is designed to combat the practice known as renovictions, where tenants are evicted under the guise of necessary renovations, only for landlords to raise the rent. This bylaw requires landlords to obtain a rental renovation license before issuing an N13 notice to end tenancy. The application involves providing the city with approved building permits and a tenant accommodation or compensation plan. This law is crucial for protecting low-income and marginalized communities from unjust evictions, and it will come into effect on July 31, 2025. Another noteworthy change is the amendment to the Ontario Building Code, allowing mass timber buildings to reach up to 18 stories. Previously capped at 12 stories, this change promotes the use of sustainable and cost-efficient construction materials. The provincial government hopes that this adjustment will help increase housing supply and reduce costs. These changes came into effect on January 1, 2025. In addition to the mass timber regulations, there are broader amendments to the Ontario Building Code aimed at aligning it more closely with the national construction codes. The new code eliminates over 1,700 technical discrepancies, making it easier for developers to build homes efficiently. This new code also took effect on January 1, 2025, with a grace period until March 31 for certain ongoing projects. The City of Toronto has also introduced new short-term rental bylaws as part of a phased approach to regulate this sector. As of January 1, 2025, the registration and renewal fee for short-term rental operators increased to $375. Operators must choose between registering as an entire unit or partial unit rental operator with specific limitations on advertising and renting out rooms. These regulations aim to preserve long-term rental housing by ensuring only primary residences can be rented out. Finally, updates to the household and high-need income limits will also take effect, providing guidelines for housing assistance eligibility. The limits have been adjusted to reflect recent data from the Canada Mortgage and Housing Corporation. For instance, in Toronto, the high-need income limits for one-bedroom units have increased to $40,500. These changes are designed to ensure that housing assistance is aligned with current economic realities. These legislative changes represent significant strides towards addressing Ontario's housing challenges. Whether you're a developer, a landlord, or a tenant, it's crucial to understand these new regulations and how they might affect you. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.